Welcome to Veranda IAS. In this session, we shall continue to discuss the Union Budget 2022. First, the Direct Tax Proposals of the Union Budget 2022. To take forward the policy of stable and predictable tax regime. The vision to establish a trustworthy tax regime and to further simplify tax system and reduce litigation. The introduction of new updated return. The provision to file an updated return on the payment of additional tax, which would enable the taxpayer to declare the income missed out earlier. This can be filled within 2 years from the end of the relevant assessment year. Regarding taxes on the cooperative societies. The alternate minimum tax paid by the cooperatives to be brought down from 18.5% to 15%. To provide a level playing field between the cooperative societies and the companies. Surcharge on cooperative societies to be reduced from 12% to 7% for those having a total income of more than rupees 1 crore and up to 10 crores. The tax relief to persons with disability. The parity in national payment of annuity and lump sum amount from insurance scheme to be allowed to differently abled dependent during the lifetime of the parents or the guardians, that is on the parents and guardians who attain the age of 60 years. The parity in the National Pension Scheme contribution. The tax deduction limit has been increased from 10% to 14% on the employer's contribution to the National Pension Scheme account of the state government employees, and the state government employees to be brought at par with the central government employees. This would help in enhancing the social security benefits. Now moving on to the incentives for the startups. The period of incorporation has been extended by 1 year up to 31/3/2023 for the eligible startups to avail tax benefit. Previously, the period of incorporation was valid up to 31/3/2022. The incentives under concessional tax regime. The last date for the commencement of manufacturing or production under section 115 BAB has been extended by 1 year, that is from the 31st of March 2023 to 31st of March 2024. Regarding the scheme for taxation of virtual digital assets. Specific tax regime for virtual digital assets has been introduced for the first time in the budget 2022. Any income from transfer of any virtual digital asset to be taxed at the rate of 30%. There has been no deduction in respect of any expenditure or allowance to be allowed while computing such income except cost of acquisition. The loss from transfer of virtual digital asset cannot be set off against any other income. And to capture the transaction details, the tax deduction at source to be provided on payment made in relation to the transfer of virtual digital asset at the rate of 1% of such consideration above a monetary threshold. The gift of the virtual digital asset has also to be taxed in the hands of the recipients. Litigation management. In cases where question of law is identical to the one pending in the High Court or Supreme Court, the filing of appeal by the department shall be deferred till such question of law is decided by the court, and to greatly help in reducing repeated litigation between the taxpayers and the department. Regarding the health and the education cess, any surcharge or cess on income and profits is not allowable as business expenditure. The tax incentives to the Indian Financial System Code. Subject to specified conditions, the following shall be to exempt from tax. First, the income of a non-resident from offshore derivative instruments. Second, the income from over-the-counter derivatives issued by an offshore banking unit. Third, the income from royalty and interest on account of leased off ship. Fourth, the income received from portfolio management services in the Indian Financial System Code. Rationalization of surcharge. Surcharge on the association of persons capped at 15%. This is done to reduce the disparity in surcharge between the individual companies and the association of persons. Surcharge on the long-term capital gains arising on transfer of any type of assets capped at 15%. And to give a boost to the startup community, rationalizing tax deducted at source provisions. The benefits passed on to agents as business promotion strategy taxable in the hands of agents. The tax deduction provided to persons giving benefits if the aggregate value of such benefits exceeds rupees 20,000 during the financial year. The deterrence against tax evasion. No set-off of any loss to be allowed against undisclosed income deducted during search and survey operations. Moving on to the indirect tax proposals mentioned in the Union Budget 2022. Customs reforms and duty rate changes. Faceless customs has been fully established. During COVID-19 pandemic, the customs formations have done an exceptional frontline work against all odds, displaying agility and purpose. Next, the progress in the goods and services taxes. The GST revenues are buoyant despite the pandemic. The taxpayers deserve an applause for this growth. Next, the special economic zones. Customs administration of the special economic zones to be fully IT driven and function on the Customs National Portal shall be implemented by the 30th of September 2022. Project imports and the capital goods. The gradually phasing out of the concessional rates in the capital goods and project imports and applying a moderate tariff of 7.5% conducive to the growth of the domestic sector and Make in India. Certain exemptions for the advanced machineries that are not manufactured within the country shall continue. A few exemptions introduced on the inputs like specialized castings, ball screw and linear motion guide to encourage domestic manufacturing of the capital goods in the country. The review of customs, exemptions and tariff simplification. More than 350 exemption entries are proposed to be gradually phased out, like exemption on certain agricultural produce, chemicals, fabrics, medical devices and drugs, and medicines for which sufficient domestic capacity exists. And to simplify the customs rate and tariff structure, particularly for the sectors like chemicals, textiles, and metals, and minimize disputes. The removal of exemption on items which are or can be manufactured in India and providing concessional duties on raw materials that go into manufacturing of the intermediate products, in line with the objective of the Make in India and the Atmanirbhar Bharat. Moving on to the sector-specific proposals. Under the electronics, the customs duty rates to be calibrated to provide a graded rate structure, mainly to facilitate domestic manufacturing of wearable devices, hearable devices, and electronic smart meters. Duty concessions to parts of transformer of mobile phone chargers and camera lenses of mobile camera module and certain other items to enable the domestic manufacturing of high growth electronic items. Moving on to gems and jewelry. Customs duty on cut and polished diamonds and gemstones being reduced to 5%. Nil customs duty to simply sewn diamonds. This is to give a boost to the gems and jewelry sector. A simplified regulatory framework to be implemented by June this year. This is to facilitate the export of jewelry through e-commerce. The customs duty of at least rupees 400 per kg to be paid on imitation jewelry import. This is to disincentivize import of the undervalued imitation jewelry. Regarding chemicals, the customs duty on certain critical chemicals, namely methanol, acetic acid and heavy feedstocks for petroleum refining, has been reduced. Duty is being raised on sodium cyanide, for which adequate domestic capacity exists. And this will help in enhancing the domestic value addition. Moving on to the Msme, the customs duty on umbrella being raised to 20%, exemption to parts of umbrella being withdrawn. The exemption is being rationalized on implements and tools for the agri sector which are manufactured in India. The customs duty exemption is being given to steel scrap last year, extended for another year to provide relief to the Msme secondary producers. Certain anti-dumping and CVD on stainless steel and coated steel flat products, bars of alloy steel and high-speed steel are being revoked to tackle the prevailing high prices of metals in the large public interest. On the export front, to incentivize exports, exemptions being provided on items such as embellishment, trimming, fasteners, buttons, zippers, lining material, specified leather, furniture fittings and packaging boxes, and duty being reduced on certain inputs required for shrimp aquaculture to promote its exports. These were some of the key highlights of the Union Budget 2022. These informations were primarily drawn from the statements released by the Press Information Bureau, Government of India. Thank you for watching. Stay connected with Veranda IAS. Happy learning.